Welcome back to Crypto Rosetta, ladies and gentlemen, with Joe, and Savage has also joined me today. Now, many thanks for watching. If you're brand new on the channel for the very first time, then why not go ahead and subscribe, tap the bell, select all notifications, and you'll never miss a show. And as ever, if you thoroughly enjoyed this content after watching, go ahead and smash that like. We really do appreciate it. Now, it was an interesting day in the markets yesterday. Obviously, we've seen a bit of a dump right across the board, rather. We're going to go over that now with myself and Savage and just kind of give you our opinions on what we think is going to happen next, or, you know, how yesterday played out. Savage, how you doing today?
Yeah, I'm not bad, Joe. Yeah, not bad at all. Yeah, the markets yesterday were a bit topsy-turvy, weren't they? It's a bit of up and down.
Yeah, absolutely. I mean, it kind of just it kind of played out a little bit how I was expecting. Obviously, things escalated quite fast yesterday, but that's why we say, you know, get into these positions that we've been trading, in our Discord. If anyone's interested, links in the description below for that. Kind of seen that we were just this rally was, going into major resistance right across the board.
Yeah, that's it. And I mean, everyone's getting sort of super excited. And, to me, don't get me wrong, it could turn into a bullish move, but it hasn't done that yet in my eyes. There would be things that I want to see before I start to think, yeah, you know what, maybe this is a bottom. It hasn't proven itself yet to me. We've got to wait for the confirmations. Otherwise, you're just FOMOing in, basically, because people, all the bullish people are saying, oh, the whole market's too bearish, but at least to me anyway, it seems to me more the fact that the market is flipping bullish than being too bearish. There's more people talking about a bottom being in than there is people talking that the bottom isn't in yet, in my opinion anyway.
Yeah, that's exactly it. And, I've kind of, got back into kind of position where I see the market at. I know I've already mentioned, previously that I, underestimated how many people were kind of, shorting 18K and sub 18K. I did underestimate that. So I do believe that, that's where that liquidity became available. And that's why we've, gone and grabbed it on Bitcoin. But equally, that's enough to, turn some people, far too bullish. You see these, Moonboy accounts shouting out, oh, clearly the bottom's in again. Off we go to 30, 40K. Here we go, folks. And it gets to a certain level where you just hear that, oh, give it another day, give it another few hours, a few more things onto it, and you go, all right, okay, now it's really bullish. Now I can smell it. Now I can smell that there's a drop coming. And, obviously we've seen like the likes of the Dow Jones roll over quite heavy on the back of bad economic data. And we're seeing these Moonboy accounts, and they're going to keep telling you, ladies and gentlemen, this week you got to be careful out there, is that I've seen a lot of them recently, talking about, oh, this Bitcoin doesn't get affected by these things. Look what Bitcoin's done. Bitcoin only goes up. We've had this major pullback, and then it goes up and it goes up, and we're on our way to $1 million Bitcoin, and all this. And this is just absolute nonsense. Again, keeps coming back to the absolute basic principles that the crypto and Bitcoin had been in this equities bull run. And now that, equities are actually in a bear market, this is different to previous bear markets, right?
No, that's it, exactly. And like you're saying, it's not in isolation. It's not just gonna take off. People, how long have people been talking about BTC decoupling from the other markets? So, this is a common thing that gets talked about, where, oh no, maybe it's going to decouple now. Maybe it's going to decouple now. But why would it? To me, I don't see why it would ever decouple, because at the end of the day, a risk asset is a risk asset. It doesn't matter whether it's gold, whether it's silver, whether it's a stock in a company. It doesn't matter what it is. When there is bad economics going on, people are going to pull their money out of risk assets, and it's as simple as that.
Yeah, and it's a maturing market as well. It's still super early. I keep telling everyone about this. Everyone's like, "Oh, it's been around quite a few years now." It's like, in the grand scheme of things, it really, really hasn't. This is still a very young market.
Yeah, 100%. Yeah, we don't have that that data to pull off, like you do with some of these other markets, like the Dow Jones or the Nasdaq, S&P. These have been around for a while, whereas Bitcoin hasn't. So, like you said, it's an emerging market, and at the end of the day, like from an Elliott wave standpoint, we don't know exactly where in that cycle is. we can sort of make some assumptions and use sort of like best practice to try and sort of guesstimate where it is. But at the end of the day, the only time we're going to know exactly where it is in that cycle is once we start to get certain reactions off of certain points and things like that. So until the confirmation comes in, for all we know, maybe we did complete a fifth wave on a bigger scale, and we're starting to have a deeper retracement now. You just don't know these things. You can speculate and you can say, no, I'm 100% certain in this count. I know exactly where it's going, But that's not the case. And anyone who says that is probably not a good analyst, because at the end of the day, you have to be open to the fact of, what if I'm wrong? What is the other side of the argument? Where could we go? Because you need to know both scenarios in order for you to get a real good sort of educated guess on where you think things are going.
Yeah, no, absolutely. Now you put out the update on Bitcoin already this morning. So if anybody wants to go, find out, check out Bitcoin, check Savage's charts, go check out that video. What we'll do is, Savage, you're able to just pull up the chart on the Dow Jones a second. We'll talk about that, because I think it's really kind of interesting again where this is rolled over from, because I've already put it out on Twitter this morning as well. Is that 34 to 35K, maybe even just a little bit above their range on this Dow Jones whole bear market has been major resistance. Okay. And there's a lot of this kind of like the bulls will be telling you, oh, we keep tapping it. Eventually we're going to go through and go to new all-time highs. But I'm just not seeing it that way. I'm actually seeing it, the complete opposite. And it looks like a brick wall that we ain't going through, to be honest. And I do expect, a further test of, new lows, because we just cannot seem to, break these major resistance. And this is where rallies take us to, and are starting to, flip everyone bullish. But again, you could have made an absolute fortune in this bear market if you'd have just got short in these areas.
No, 100%. I'm going to bring the chart up now. And I mean, we were talking about this the other day when I think it was when Polina was in the chat. And I had this marked out as sort of a zone that we could see a reaction on. And basically we've come up into here and we have reacted off of that point. So it's not confirmed. We could still find support and look to push up. You've got to be open to that fact that maybe within this, maybe it does have one last sort of leg to the upside. But for the fact that it's actually getting a reaction off these zones, and it's quite a strong reaction so far. So if it loses the support zone here, it's sort of 33.03, you would assume it's going to come back and test this low at this 32.576. And then from there, it all depends on what happens from there. If it loses that, obviously, now he's talking about coming a bit lower down here and retesting some of these other zones. And I think the thing is, it's not going to be seen. It's going to be seen as a sign of weakness if we come up here and we've tested this zone and we start to lose this area. Like you said, a brick wall. After a certain amount of retest, people are going to start losing confidence in that zone, and they're going to be thinking, like you said, coming back down into these lower areas. I mean, once we get some more structure, we'll have a better idea of what it is. But yeah, it's completely possible that this starts to get some legs to it.
Well, time of recording, we're on here, just about 2 or 3 hours before the markets open today, and already the futures are printing fairly red on the Dow Jones again. So we're actually looking at a gap down at the minute. So we'll see. I'll have to see. Interesting to see how that one plays out. But again, folks, these things are not going to go down in straight lines. Obviously, it was fairly big red candle yesterday, a couple of red days. Could it be a third day in a row? Absolutely possible. But again, it's gonna chop on its way down. You can just look at the charts, the left side there. Obviously, you can see how it always kind of chops down.
No, exactly. And I mean, I'm just gonna flip over a couple of other ones that we were looking at. No, the S&P. We're talking about this zone. We've come up into it and we've faced this rejection. There's nothing confirmed yet, like I said, but the fact we've got a reaction off of this zone is sort of the first piece to the puzzle of a deeper move.
It looks good so far. It does look good so far.
Yeah, I mean, S&P, then basically we looked at the Dow Jones and what was it? NASDAQ, isn't it? Oh no, we didn't chart this one up. But yeah, it's the same idea basically, as we were looking at this at this potential rejection zone here of the 618 towards the 786, and we've basically moved up into the zone, and we've started to get a rejection here. Like I said, it is possible that we can argue that within this we might start to see a move back to the upside with the structure, but the fact that we've had this rejection off the zone is sort of that first warning sign that there could be something coming, and we could actually be looking for this to rather progress to the downside, at least sort of, at a 1-to-1 or even lower. It all depends. And yeah, like you said, the markets have been behaving a bit strange recently as well. So we've got to just keep our ear to the ground on this one. And
I'll make a prediction here, Colin. I've kind of thought all bear market that the Nasdaq will lose 10K. I do think we'll see 4 figures on the Nasdaq. Now, this kind of goes back to last year. I put out when it reached their 13K. I said, "Hey guys, I think this is it. This is like major resistance. Expect a strong drop on the Nasdaq from 13K," and that absolutely played out beautifully back in August. And it barely held on to 10K, but I do think it's got lower to go, and that's going to take Bitcoin to lower lows, in my opinion. Now, also talked about Bitcoin. Still think we're not there yet. We can't guarantee that 22K is going to potentially come in. It's still May. Like I said, we've got to see if we get that fifth wave of the correction. But the move up, the rally has always just looked like a correction, hasn't it? And that's kind of the way I'm seeing it. And there's again a lot of misunderstanding when people start shouting the bottoms in. This is a massive impulse move up. You have to zoom out, look at the higher time frames, and you see this tiny little green thing, and you go, "Where's this massive impulse up, this massive bottoms in signal?" It's just not there yet, right?
No, that's it. And a lot of people are talking about like, oh, but we've got this parabolic move, and we've managed to break above like the 30 weekly moving average and stuff like that. But the thing is, if you have a look at the previous bear markets, we did that exact same thing before falling right off a cliff.
Yep.
So you gotta be careful with these things, because that could history doesn't always repeat itself, but often it rhymes. And it's something we need to be sort of looking out for. It's something that has happened before, where we've come up to that, and at those times it was the exact same thing. Everyone was getting super bullish. Oh, these indicators are saying that this is flipped into the green. We've got this, the RSI is above 50. We've got all these things, and then it turns, and basically we just fall back down to a new low. So just be careful, guys. If you are going to be trading these things, make sure you're using good risk management. We always try and sort of push that within the channel, and within, it is so important. People have a lot of misconceptions, like a common argument that comes up is, but the exchanges can see where your stop losses and stuff like that. But you shouldn't be trading without a stop loss, because they can also see where your liquidation level is. So they don't care if they stop you out or preferably liquidate you. That's what they really want. But it's going to move one way or the other, regardless of your individual stop or liquidation point.
That's it. We're always trying to, teach, good risk management on the channel, whether it be, on YouTube, or whether it be, in the Discord to members. And yeah, stop losses, so important. And, put out, on the trade on, gold yesterday. Also equally important that we talk about, again, we were talking to members a lot about this last night, is locking in gains. I was on a trade in gold yesterday. I'm still in that trade. However, I have, locked in some gains, and now, my stop loss is in the green. So essentially I can't, I'm not going to lose any more on that trade, and, money's in the bank. It's all about compounding your balance, essentially building. I always say, with the trading folks, it's not a, instant get rich. I've got to put one trade on, and this one trade is going to make me millions of dollars, and I can retire off this one trade. Look, it's possible. I'm not saying it's like an impossible thing. You could have put, your life savings on a short on Terra Luna at the top and rode it to zero, and you got lucky and you just won the lottery. So I know it's possible, but the point I'm making is folks, statistically, the odds of that happening, the odds of you pulling that off are extremely low. So that's not what you should be betting on doing. You should just be looking at chipping away. We call it scoring those jabs, yeah, locking in those little gains, not looking for those knockout blows, and your account will eventually start to build, and then you'll start, adding a zero onto what you were doing, last year or months ago, etc. That's the game you should be looking at. Get profitable first, start locking in gains, build your confidence, get what's working for you, and then just keep it going, keep up the hustle. That's what I wanted, to say with the trading. That's what I think, the majority of people should be looking to do.
No, 100%, Joe. People are always looking for that home run, aren't they? They're like, I'm going to enter this. This is the bottom. I'm going to ride this to 100K in a long position. And, the move will go up. They'll see those gains come in. They might go some stupid amount up, 600%, or, whatever it is, depending on what leverage they're using, and then no gains are locked in. And then it comes all the way back down. And at a best case, they've moved their stop loss to break even. But at a worst case, then they actually end up losing money. Like we were talking about this last night, obviously, with the guys in the Discord. And, like you said last night, it's basically it's fine if you get stopped out of a trade and you've taken some profits and you stopped out in profit, but there's no reason for you to lose unrealized profits as well as take a loss within the same trade. If you sacrifice some profits, but you actually manage to, get out break even or at least take some profits along the way, whether it's small amounts, whatever it is, at the end of the day, if you're locking it in, like you said, you're just chipping away, you're just getting that account moving in the right direction over time. That does show. It's very important.
Yeah, absolutely. Now, just looking at, just going over Bitcoin again, your time recording, it's around that 20,700. Obviously, I've just mentioned that I still think, there's a chance, a small chance that 22,000 could play out if we do get that last little push. But I'm not so sure it's going to play out now, and that's why I wanted to get a position around 21,000, which I'll be adding to if we do go back above, and that's absolutely fine. Now, could that actually just come with a little retrace, a little rally on the Dow Jones or the S&P? Absolutely, but I don't think that they're going to take out previous highs, in my personal opinion. Whether Bitcoin does and goes to 22, that's another thing. But I think it looks pretty bearish from there. Obviously, we've talked about the RSIs previously. There's no change there. It's hidden bearish divergence, folks. Again, it's just going to be higher RSIs. Yeah, the price action, it's still lower lows. Yes, it's going to be higher than the 21,000, but look, it's not. We're not taking out that 25. Once we take out 25, it would be totally different. But I don't see any signs of that coming anytime soon. I'm seeing on there's a bit on Cointelegraph this morning saying there's possibility Bitcoin can go to 30K before then setting new bear market lows. Now that is also one possibility. I'm not saying that. I've always said that that's possible. It's not my primary expectation, and that's, to be honest, what I would actually fully define as max pain. That would truly be max pain if we were to go to 30K and then to go to a new bear market low sub 15K, right?
Yeah, 100%, because you can only imagine how bullish the scene would be at that point. Like, everyone would just be screaming 100K plus. By that stage you'd probably have people talking about $1 million Bitcoin and all sorts of random things going on. So I think if that would actually be like the biggest trap ever, I think that would catch so many people. Yeah, I think we're gonna have to just keep an eye on it. Like you said, well, in my video when I was looking at it earlier today, we're still looking for the potential to have those fifth waves, but they've not been confirmed yet. So at the moment, we're just sitting in a 3-wave structure, which can always break down. So if we lose certain support zones that we went over in the video, basically, that's when you can start to get worried that's when you can start thinking, okay, well, maybe this isn't going to continue. At the moment, we're sort of right in that sweet spot. So yeah, it's possible we could see that rally. It's possible. There's a lot of possibilities. There's a lot of different ways of counting it. And within Elliott wave itself, not only Elliott wave, but most technical analysis, it's down to the interpretation of the analyst. and people can draw trend lines certain ways. They can draw, they can take it off wicks, they can take it off the bodies. You can adjust it here and there to sort of fit whatever you're trying to show. But at the end of the day, the market's going to do what the market's going to do. And at the end of the day, you've got to wait for the market to show you what it's doing. There's little hints and signs and things, you can pick up along the way. But at the end of the day, the market's going to do what the market's going to do. No one 100% knows what it's going to do. So you've got to keep your mind open to that. Just be aware that, even if you are bullish, be aware of the bearish scenario. If you're bearish, be aware of the bullish scenario. It works both ways. At the end of the day, there's money to be made in this market. Whether we're bearish, bullish, it's going up, it's going down. There's always an opportunity to sort of trade it. But there's we talked about this as well yesterday. But there's times when you want to flip bullish or you want to enter a bullish position or a bearish position. You don't want to be going bullish right at resistance, and you don't want to be opening shorts right at support. I think that's an important thing. That
just right one on that. I mean, talking about bullish at resistance again, yeah, we've been seeing that on Twitter. It's like as soon as Bitcoin breaks 20K, everyone like going crazy, and it's like, hang on a minute, we're just going back to like we're just back testing an area here. You know what I mean? We're back testing an area, but everyone's like, oh, the bottom's in. It's like what? Again, we've just seen it. We've seen it all bear market. Going back to January last year, I did that. That was when I did say that there was a potential that I thought this could be a multi-year bear market. Well, that was 12 months ago now. So we're going to have to kind of see if this kind of plays out. And, what's the definition of a multi-year bear market? Is that at least 18 months? I don't know, folks, but I'm just going to say that for me, to be right on that, I think we've got, still see this bear market continuation for at least the next, 6 months from here. But I think it could go longer, later into the year. But I think it's going to be an interesting year. I've talked about this constant, bad economic data. I don't think that's going away anytime soon. I really don't, folks. And where you're seeing, rallies on, indexes, we've seen it in the UK, we're seeing it in Australia now. I do think that these are going to eventually peak out. Don't be thinking like, even if these set new all-time highs like UK, Australia, is close, like I don't think, they're going to absolutely, blast off to the moon either. Not without the backing of what's going on in the States and and China especially as well. And these markets just don't look good to me. Now, you never know when if you look at the history of like crashes, there can be like single events that can cause crashes, but you just don't know. Either that could happen or that may not happen, and like we may not have this massive capitulation or whatever. It may just be a really slow grind, slow choppy grind down, and that's kind of what's playing out at the minute. So just be aware, folks, that again, when Moonboys talking about all these green candles, don't be thinking that that's breaking the trend. What you'll see it all over Twitter again. This is just, I know I'm going off on a bit of a rant on this one, but I really want people to be aware of this. Is when they keep drawing these blooming lines, they keep drawing these trend lines, these triangles, and they've got the little green candles popping out the lines, and they're saying, "Hey guys, look, the blah blah 256-day trend or whatever has come to an end." It's like, no, come on, folks, you got to stop falling for this crap. That's what it is. It's total crap. It's just crap to get follower engagement. They're just drawing lines exactly how they want to say that the downtrend is over. Don't fall for it, folks. Just be careful out there. Savage, just one more chart one you to have a look at, but before we wrap this one up, let's have a look at the DXY, because the DXY has been really interesting one to me, because I'll be honest, it's been a bit of a tease the last few weeks. It really has. I've been constantly talking about, I thought 103 was, potentially going to hold. It didn't. Then looking for 101 to hold. We're close. We're having a little bit of a bounce there from yesterday, but it's kind of mission critical with what's going on with this DXY now. But I'll be honest, maybe I was wrong on this one, and it could retrace a lot deeper than I initially thought, and still maintain being bullish, right?
Yeah, that's it. I mean, it is possible. I mean, the way I was looking at it was potentially looking at this as a fourth wave and then looking for this fifth wave to come to the downside here. And effectively, we've come into the zone. So we've actually wicked down slightly below it. So for the most part, I am still expecting us to start moving away. We've not had a confirmation of it quite yet. And the internal structure isn't great on the daily. If I come into the 12-hour rather, the problem is because we've got this strong candle in here, to count it becomes a bit difficult. We can argue we've had an extended wave 1 in here. This is a 1, 2, then this we could potentially ask for as a third if that's the case. But then it would be critical that we don't actually cross this point here of this 102.947, because effectively crossing that would indicate that we have invalidated this as a, basically what I was looking at is the potential that we could actually have this whole move down here as a wave 1, 2. This would then become potentially a third wave, either here. It's possible the third is here and this is a fourth and a fifth. Or alternatively, the third wave is here and we're sort of within this fourth wave. So it needs a bit of time to confirm. But the first indication I would see that basically we have a potential to actually take this top off would be coming back above this 103.5. If we move back above that, then it becomes likely that actually what we're starting to do is form some structure here. And, we'll probably be looking for something like this to play out where we have a 1 and 2, where maybe come back and back test some of these zones here and then look for that continuation to the upside. So we'd want to take this fourth wave high here, and then we'd want to see a move back to the upside within this and start to see some progression here. But yeah, some key points would be this 105.646. If we move back above that, that would indicate that we can't extend from here at least. But then really we'd want to move back above this 107.993. So yeah, we would have to just watch this on the retracement as well, because if we're looking at this move, basically what I'd want to see is also I'd want to see how we react around this 50% and also this 786. If we were going to look for continuation to the downside, that would be sort of where I'd be looking for it to come in, so that would be a little zone that if we do move back up here, this 111 would be sort of the higher end of that spectrum, but this 107 would be quite an interesting spot as well. Also got some confluence with some areas of support and resistance here. So yeah, it is possible we might have a little bit more down to come here if we're looking at this potentially as a fourth wave within here. Either this fourth wave, I said, can be playing out still, or we are completed it and we're actually this third wave is either completed here or we've completed it into here and we've got this fourth wave playing out here. It is also possible that this third wave is completed here and we're just becoming a bit more complex here, where this is an A, B, we get a C, and then we drop for that fifth. If we do drop for this fifth, then obviously we would be then looking for that potential to have that last rally within Bitcoin and the crypto markets, and then it would also probably tie into a bounce for the equities. So it's something we just got to keep an eye on. However, like I said, if we start to move back up here, take out this 103.482 zone, then we could actually start to think, okay, well, maybe this is going to start to move to the upside here.
I was going to say, what I will say on the DXY is, whatever happens here, folks, even if it, creeps a little bit lower or whatever, you can kind of, for me, you can smell it. It feels close. It feels close to me that this correction, this looks like a very healthy correction to me, and it feels close that it's coming to an end. You can see it in the in the charts. Even if that was to drop a little bit more, it looks like this correction's exhausting to me.
Yeah, and that's it. You can see it in the slope. It's starting to round off now. Yeah, which would when we start to get these rounding sort of towards the bottom here, it normally is indicative of we're going to have a bounce. And it hasn't really had any kind of a substantial bounce really besides up here. So you would be expecting this to actually start to have a bigger bounce here, in my opinion anyway.
Yeah, absolutely. You can even see on those, those daily candles, obviously it looks like we're kind of consolidating around that kind of 102 high 101 region. I did say, once the 103 when we're looking to hold 101. So I'm really interested to see how this one plays out, folks. But again, it's just kind of staying patient. And, you know, like I said, we're both kind of under the opinion that, you know, a bounce is coming, and you just don't know if it's coming next hour or if it's going to come in the next 3-4 days. We can't possibly predict that. But what we can say is that, you know, we do strongly kind of, you know, feel it's coming. Obviously not financial advice, and there's no guarantees in these markets, but that's just us analyzing it and, you know, what it looks like to us.
Yeah, that's it. I mean, there's no guarantees in any market, and yeah, you've always got to be open to the fact. But I mean, if we do actually come down for another push, this zone here of this previous low might be an interesting area that we could look to maybe back test at 101.297. If that's the case, and we do actually start to pull away from this, you know, we can start talking about potential double bottoms here and a few things. But once again, we're still not gonna just go punk at that point. You know, you gotta just take it level by level on these sort of moves. You'd want to see that reaction up, then you'd want to find that higher low, then you'd want to start to see breaking some of these swing highs that we've got here. You know, you'd want to start breaking above that, finding support above these zones again, and then actually looking to break to the upside. So, you know, you would want to get another move up here, potentially come back test this, and then start, you know, talking about potentials of moving up higher within these moves.
What you got to say is, you know, a lot of these charts are kind of, you know, just to wrap this one up, are kind of, you know, lining up beautifully for me. Like I said, it looks like we've got the DXY correction exhausting, Bitcoin with the RSIs and where that's gone to looks like, you know, that move is exhausting to me. Already looks like, you know, equities are potentially, you know, on the way down. Here we are, you know, on the 19th of January. So this is all kind of like lining up for me, you know, that again, we're going to see, you know, more reversal, downside, continuation. And yeah, February's looking pretty bearish, folks. Got to be honest. Just in the charts, just going on the charts. I'm going to make a prediction here because, you know, I like to make predictions. You know, we're about just over, you know, 10 days away, just a little bit more than 10 days away from the next month. And yeah, next month's looking pretty bearish for me.
No, I agree 100%, Joe. There's a lot of things all indicating that there is a good potential of us having a drop come in. If that drop finds support earlier on, well then, yeah, maybe we can start talking about bullish scenarios. But until we see that come in, I'm still more inclined by the data within the charts that we do have some more downside. And I mean, we've got, I know this is a bit of a sort of tongue-in-cheek thing, but new moon is coming up as well. Often after new moon, we start to see some red days. So that's on the 21st, I think. So yeah, just something to keep an eye on.
You heard it there, folks. Let's see if that one plays out. Yeah, not sure where that comes under technical analysis, but there you go. Right, we're gonna leave this one with you there, ladies and gentlemen. You know, thank you so much for watching. As ever, if you thoroughly rather enjoyed the content, go ahead and smash that like. You know, if you want any altcoins, any videos, chart, and again, leave us comments below. We love all your feedback. I appreciate it. Savage appreciates it. And yeah, we've been getting, you know, really great comments recently, and the channel is growing thanks to you guys. So thank you so much.
Yeah, 100%. I just wanted to take a moment and say thank you to everyone, because we really do appreciate it. And, you know, we're still growing at the moment, you know, so every single like, every single subscribe, just even a comment in the bottom saying thanks, or video or whatever, or even just commenting on what your thoughts are within the markets. We're always happy to hear from you guys. So just throw it down there in the comment section. We want to know what you guys are thinking. Do you think that we've got a bottom in? Do you think that we've got some more upside coming in here? We're always happy to hear about it, you know. And also, while we're on that, if you want to have a chat, why not just drop into the Discord? It's free to join. Once you're in there, just mention a member of staff. We'll be happy to help you out with anything, whether that's just having a chat, whether you want some advice if you're in a trade or something like that. Obviously, we can't offer you financial advice, but, you know, we can look at the charts and we can give you some options and some things that we can see going on. And, you know, we can sort of guide you as to what our idea is of what the market's going to be doing. So why not come and give it a look? It really is a great place to meet people who are like-minded. There's so many great guys in there and girls, but, you know, it really is just a great place to come and have a chat, you know, whatever it's about. We're always happy to hear from you guys.
Thank you all for watching, and we'll see you again.
Cheers, everybody.